Finally today, we've been talking IPO bubbles in tech and also seemingly a bubble for SPACs. SPACs, again, are those blank check special purpose entities that are allowing companies to hit public markets without going through the whole rigmarole of doing an IPO. For example, content recommendation company Taboola announced this morning it has agreed to go public via a SPAC, valuing the company at $2.6 billion and raising for itself $554 million in capital. Smart lock maker Latch says it will go public, merging with a SPAC at a $1.5 billion valuation, expecting to raise $450 million in cash for itself. So far in 2021, an average of 5 SPACs have been launched every single day. If you're wondering why we care about this, well, right there. Look at the amount of money raised in just those 2 examples from just this morning. Easy access to capital can make a huge difference between what startups survive and which don't. And we care about that from a looking at the health of the tech and startup ecosystem generally perspective. Because, $500 million in cash can buy you years of runway. But also, this has the potential to give a final shakeout to the startup markets that we care about for an entire generation of startups. CNBC is reporting about how the SPAC boom could provide an exit ramp, which you should read as a lifeline to survival for example, digital publishers like BuzzFeed and Vice and Vox and Bustle and Group 9. Quote, Bustle Digital Group, Group 9, Vox, Vice, and BuzzFeed have had recent conversations about going public via special purpose acquisition vehicles this year, according to people familiar with the matter. Group 9 has taken a further step, actually launching its own SPAC to facilitate the process of digital media companies going public. Before going public, the group of 5 will probably see some consolidation in coming months, according to Bustle Digital Group founder and CEO Brian Goldberg, who said he's in conversations with several SPACs. Quote, of the 5 of us, I wouldn't be surprised if 5 turns into 3, Goldberg said in an interview. Maybe it's 5 to 4. I don't think 5 will turn into 1 or 2. These companies do merge well. They capture a lot of synergy on costs and revenue when they merge, end quote. The struggles of the media industry over the last 5 years have made digital companies relatively lean and mean, Goldberg said. Paradoxically, having a more mundane growth story to tell investors may work in favor of the industry for a class of investors who want to invest in profitable companies trading at 6 times revenue instead of companies like DoorDash or Snowflake, which are trading at multiples near 50x revenue, he said. Digital media companies have had to mature and grow up, maybe more than SaaS or fintech, who haven't had to focus on cutting costs or profitability, Goldberg said, end quote. So we care here because the SPAC boom could basically take a whole bunch of startups off the table in the coming months. And by off the table, I mean in this sense. Having an exit or going public is the mark of success for a lot of startups, and not just because the VCs and investors get paid. I could go down the list of startups that have basically been treading water for a decade or more, but are still around because they got enough cash from hitting the public markets that basically that's why they're still here. Hitting public markets mean you'll live, you'll stick around. So that noise you hear is every startup that is remotely close to even being slightly sustainable long-term, rushing to find a SPAC to call their own before the music stops. And also, you'll hear the trampling of capital also lining up to do these deals since they're so in vogue at the moment. Basically, we could see a whole generation of startups guaranteed to achieve success, in quotes, by reaching public markets while the getting is good. Indeed, the Wall Street Journal is reporting hundreds of SPACs are looking to acquire tech startups in the coming months. Quote, if you don't have your own SPAC, you're nobody, said Peter Atwater, founder of research firm Financial Insights. These deals are generating a lot of interest because they produce big paydays for their creators, make it easier for startups in hot industries such as electric vehicles to capitalize on a frothy run-up in the stock market, and offer everyday investors a new path to a hot stock. When a SPAC buys a firm, it merges with it in a sort of accelerated IPO process, a so-called reverse merger, while bypassing the normal scrutiny an IPO receives. For now, there is no end in sight to the SPAC attack, which coincides with a vast run-up in risky investments that has everything from U.S. technology stocks to Bitcoin soaring. The SPACs are pulling in more than 70% of all money raised through initial public offerings this month, up from nearly half last year and about 20% the year before, according to Dealogic data through Thursday. The 67 SPACs created this year have already raked in nearly $20 billion from investors. That is well above the total from all of 2019, which was a record before last year's historic haul of $82 billion. Many of the 287 SPACs currently hunting for targets are looking for deals in hot sectors such as technology or electric vehicles, according to figures from data provider SPAC Research. Blank check firms often seek deals valued at least 5 times as large as they are when including debt. That means deals adding up to several $100 billion are likely to be completed in the coming months, analysts say, setting SPACs up to be a powerful force in markets. When a SPAC is launched, it has to merge with a target within 2 years, so the effects of this wave will continue for a while. In total, 26 companies tied to mobility and technology merged with SPACs in 2020 and recently had a combined market value of more than $100 billion, according to data provider PitchBook. Many of them have little to no revenue. Nonetheless, an index of those companies posted a total return of nearly 80% in the second half of last year. Quote, "When you have everybody talking about SPACs, it raises the issue as to whether or not there is an element of speculative mania," said Roy Barron, managing member at Westchester Capital Management and a SPAC investor, end quote. As Kevin McPartland tweeted, quote, "It doesn't seem like this can end well for most in the long run, but the upshot is more companies in the public market, right?" End quote. Well, yeah. Grok this last paragraph from the journal piece I was just quoting from. Quote, "Some still predict this frenzy will end badly. People will look at the proliferation of these vehicles very similarly to the way they look at the craziest ideas that were being thrown around at the peak of the dot-com bubble," said Mr. Atwater, the founder of Financial Insights, end quote.